Hello and welcome back to Simply Stated Finances. Today I'm going to touch base on a tax topic that I think is going to catch a lot of people by surprise during tax season. It's something that was changed at the beginning of the year, but because it typically doesn't apply to anyone not running a small business, a lot of people didn't realize it was coming, didn't think it pertained to them, and they're going to be surprised when you get a 1099-K in the mail in January saying, hey, you had these online sales and they've been reported to the IRS and you pick them up on your tax return. So first of all, what a 1099-K is it's a form that is generated by credit card transactions, whether it's swipe or PayPal. Any electronic transactions that happen during the year are reported on this form. And in the past, these companies were only reported to generate this form for sellers that generated more than $20,000 in revenue or had more than 200 transactions during the year. So the rule that changed during 2022 was that there is no longer a transaction limit. So if you have one transaction online, you sold one thing, this could apply to you. And the dollar amount threshold has been lowered to $600. So if you are making cornhole boards and you're selling those online and you sell a couple of boards and you sold them for $600, you may be getting a 1099-K and have to report that on your taxes at the end of the year. So what this means for those that aren't running a small business and may be surprised about this is that you may have hobby income that you have to pick up. So this part of the regulation has not changed. Hobby income has always been taxable. Weren't doing it because it wasn't being reported to the IRS. So you're making a couple bucks on the side. IRS wasn't the wiser. People didn't even realize that it had to be picked up. So nothing was being done about it. The IRS is aware that this is happening. They know there's a lot of money left on the table because this isn't being taxed. So they're trying to capture all these untaxed revenue streams. So the rules with a hobby income differentiate from Schedule C business income in that with hobby income, you have to pick up all of your income, but you can't deduct any of your deductions. So when you're selling those cornhole boards, you are going to have money in paint and you're going to have money in the wood and other supplies to make those, but you can't write that off because it's a hobby. So you have to pick up, if you made $1,000 in revenue off selling those, you're going to have to pick up the full $1,000 as taxable income. And the IRS says, sorry, you don't get the deductions. Now, back before the tax law changes about 5 years ago, you could pick those up on Schedule A as itemized deductions, but they were still very, very limited. So nobody, I won't say nobody, very few people were getting them anyway. So in theory, the law changed, but in reality, very few people were netting any expenses against their hobby income anyway, so you probably wouldn't see a difference on your tax return. So those miscellaneous itemized deductions have gone away, so there is nowhere on your tax return to deduct those expenses. So when you get the 1099-K, if it says you sold $1,000 worth of cornhole boards online, you're going to have to pick that up and report that to the IRS because they're going to know about it now. So the one good thing is it's not considered earned income, so it's not subject to Social Security and Medicare tax. So that will save you some self-employment tax on that. It's just subject to your federal tax and possibly state taxes depending on your state rules with regard to hobby income. The difference is if you have a Schedule C, if you're truly running a business and you're like, hey, I know there's a need for these. I'm going to sell these cornholes. You're advertising. You have a business name. You're putting it out there. You have a profit motive. You're really trying to make a go at this. Then that's a legitimate business in the IRS eyes, and you can deduct expenses. So you can put that on a Schedule C, and you take the $1,000, and then you can deduct the cost of your board, your nails, your tools, any advertising expenses you have, mileage, all that good stuff that you normally deduct for a business. So if you truly have a profit motive and can prove that to the IRS, then you can put that on a Schedule C. Now the flip side is whatever net income you have on your Schedule C is subject to Social Security and Medicare tax. So you, in addition to paying your federal and possibly state taxes, you also have to pay in self-employment taxes. So it's really a matter of determining what type of income it is. If you got audited by the IRS, could you prove to them whether it was a hobby or whether it was a business? Because they will look at a checklist to see, how you were running it, what it looked like, and whether they think it was a business or whether they think it was a hobby. So you need to be able to prove that. The burden of proof is on you if the IRS comes in to prove which hat you were wearing when you made those sales. So just keep in mind when you get that 1099K, the other thing that might happen if you are selling your kids' clothes online, you're cleaning out the kids' closet and you're just trying to sell those to a neighbor. And I know eBay, some of those are great ways to clean out the closet and get rid of those pretty easily. You will also get a 1099K for any of those sales that are over $600. For those, you have to tell the IRS that you made a loss on those, which is generally true. Normally, if you have a garage sale or you're just kind of cleaning out your closet, you're not making money on that. You make some pocket money, but if you took the cost of the clothes minus what you sold it for, there's generally a loss. That tax law also hasn't changed. That's always been the case. Garage sales aren't technically tax-free. They just haven't gone after them because in the past everybody was exchanging quarters and there was no way to trace it. Now that everything's online, the IRS is getting a little trickier and they're trying to follow this money a little bit more. So just be aware of which bucket that these sales fall in and how they need to be handled on your tax return so that you're not getting surprises and you have all your ducks in a row when it comes time to file your taxes. So I hope this was helpful information. If you have any questions, drop a comment below. I'm happy to answer them. And please feel free to share this with friends and family that might be also caught unaware this tax season. And like my YouTube channel, I'm going to try to upload more videos on a regular basis to kind of keep everyone in the know and educate everyone a little bit more. I would love it if you liked and shared my page, and also follow Simply Stated Finances on your favorite social media site to kind of keep up on things as they're changing and affecting your taxes or just general finances at the end of the year. Have a great afternoon, and I hope to see you back here.